Okay, good morning. All right, so as we know, the markets had some, I shouldn't say unusual, not in this market anyway, but I'll use the word unusual anyway, because it seemed unusual yesterday. The gyrations, wasn't surprising to see the gap down bought yesterday, which is this bar right here. And prices rallied all the way up. So at that point, because it was down, kind of let's just say in two moves, right? Here was the breakdown bar and the consolidation where it couldn't rally, and then it broke again into support. And the attempt to hold it here, you can see the bottoming tail right there, didn't result in a move up to the resistance. Rather, it went sideways. So that was a bearish indication. And then as it began to drop, and this was, I guess, 3 days ago, right? On the 17th or 2 days ago. It went down into the close and then the gap down that got bought. So that wasn't a surprise considering just looking at this hourly chart. What happened? Break, sideways, break, sideways, break, gap. So in this time frame, and also right into this, the area of that support, not quite to the bottom of it, but the area. So we'd look at that as potentially an exhaustion gap. And from there, you can go to your 5 minute or 2 minute or whatever and looking for some kind of pattern to play for the gap. Now, when it got up there, kind of surprisingly, it wasn't a downtrend, but considering the move into support, the exhaustion gap, it gave it all back. And then it went down even further. And then it formed a bottoming tail bar. And then it went up, which formed the reversal day that we have on the daily time frame. So one of the things to consider here is, as you look at the daily time frame and we see it's in an uptrend, and it's pulled back for a few days to an area of support. We talked about yesterday. Hold on, a little drawing thing here. We talked about yesterday and a couple of times this week, the power move, less of a powerful move, but it was fine after that. The pullback, nice size move. And then this one had a smaller move, which tells us that the momentum was slowing. And the indicator methodology people will show you, the bearish divergence, yada, yada, yada. And then, of course, if it makes new all-time highs, they're not going to show you this, but that's just what they do. And that just leads to a lot of confusion. So you get a bar like this within an uptrend, just like that one, reversal. You really have no idea what or how this was created intraday. So this could have just been, a gap down, a consolidation, and then it started to move up. And so just looking at daily charts doesn't always mean it happened exactly the same way intraday. Yeah, that's how I'm saying, a little double shakeout. Sort of, yeah. This is definitely a shakeout right there. And so those of you that are trading gaps, this is definitely something to consider when you're looking at a gap. Look at what happened the day before. That's part of the gap course. There's great information there about the intraday structure from the prior day and combining that with gaps. But now, clearly, this is suggesting it's going to go up. And I don't have this on a 24-hour chart here, but we'll get to that anyway, rather than changing it now. As we know the futures here, right? They're up, right? And Qs are up nicely. Dow's up 100 points. And so it's going to gap up above the bar. And, that makes sense. That's what it would be doing with this kind of a pullback and reversal. A shock would have been a gap down here. That could happen as well, and could have went down to this level. So just because we have a pattern, that doesn't mean it has to do what it says it's going to do in the moment, right? It can do different things. And that's one of the reasons why, any recommendation that you'll hear us give, whether it's in the letter or it's in the chat room, it'll say, if it's a buy XYZ when it trades above such and such a level. So, similar situation like this, buys SPY when it trades above yesterday's high with a stop somewhere below yesterday's low. If we're a little uncertain, it's going to be down below this prior swing low, and then we'll manage it from there. If it's too big of a gap up, well, then we're either going to do a 5-minute high or a 30-minute high, or we're just going to do nothing if it's too big of a gap. For example, if it was the gap up here from a swing trading perspective, we're not doing anything. From a day trading perspective, well, maybe a pullback into this support or a 5-minute high or whatever pattern should set up. So now the question is, can it make new all-time highs? That's what we'll look for today. Does it continue? Does it gap and crap? We do have a weekly chart, which is somewhat suggestive of a stall here. And just because this is up here today, that doesn't mean it has to continue to go up. But if it should continue, right, to move up this bar at the end of the week, it could be, well, that's not a good color for a bullish bar. It could be, a green bar that looks like this, suggesting it's going to continue to move higher. So we'll see where this ends up at the end of the day, whether we've got a red weekly bar or a green weekly bar. And another narrow range day, maybe trader. It's hard to say. When we get to the futures, we'll look, but I could change this to just as we look at SPY here, because I know you do the different spreads on the spiders. So let's just look at a 24-hour chart and just see where it is here. So the resistance area is up here. This is the gray area is the overnight trading. Right, I know, but I know you trade SPX, but it's going to relate to what's happening here. It's going to move pretty much the same. You can relate to those numbers. So it's chopping around here. We look at a minder, right, and say, okay, this is up. We look at a watch list and it's up. Well, then we go to the chart and you say, okay, it's up, but what's it doing? We have, where it went up and kind of came back down. It went up. It's consolidating at resistance. So that's bullish. The fact that here prices went up, they went up more. It hit some resistance area and they're not going down. And now we've got a wider range green bar here. So it's also creating a new reference point of support that it shouldn't violate. And so a sideways price action at resistance after a move up, bullish, black and white. Will it go higher? Well, if it takes out the little range here that it's been creating, the assumption is it's going higher. If it, and then we see, does it keep going higher? So as we look at patterns, they guide us as to what our bias should be and what we believe will happen in the future. Then we see if it actually plays out. That's the essence really of technical trading. And we look at what's happening in multiple time frames to see what's the probability of an explosive move, right? You can have this same pattern down here, could be more suggestive of what happened versus, hey, this has been going up for a month and a half. Granted it's at new all-time highs, but the momentum stalling. Is this pattern going to produce the same thing if we saw that pattern down here? Probably not. So a narrow range day is certainly within the realm of possibilities, or at least very within the realm of possibilities of being contained between this high area and this low area. That I would say absolutely. Now it's asking me, buy pre-market on the 2-minute has that pattern. Could be. Has this pattern. It'll be clearer on the futures. I don't know if this is real, if that was a whip, but you've kind of, you've got an uptrend up there into, it's really hard to see. So let's look at the futures. All right? We always do a little lesson here when we do this, and you get a clearer view of this uptrend. And there's a nice little move, and we get a little stall here, where it kind of pushed up and came back down again. So at that point, we'd say, well, is it a red bar ignored? So being up here, it's not like it's up a lot. I like to go back to the hourly here, pre-market. Anyway, consolidation, support, came back up to resistance, and it's forming now a trading range in here. So what we'll see happen here at the open is, well, what we'll be observing, I should say, as to what happens. Can it clear these highs? And if it does, it should continue to go higher. Right? We've got an uptrend. We've got a pullback to support. We've got a gap down in reversal day. And if it can clear these highs, the assumption is it should continue to move up. So there's the bias. And then from there, right, we can say, okay, where should it go? I was supposed to make another. Yeah, where should it go? Well, it should go up to the top up here if it can do that. Now, we always have two scenarios, and bar by bar analysis will force you to have that scenario in your face, even if you're not thinking about it in the moment. And that scenario would be, well, what if it breaks out above these highs and then forms a red bar like this right after the green bar breaking out? Well, that's going to strongly suggest it's going to break down through the bottom of this base, and then that sends it down here. And then you probably do have that narrow range day that goes absolutely nowhere today, right? Exactly, Tony, right? The futures give us a clearer picture prior to the open because there's more trading activity where traders are, actually trading that, whereas I don't think too many people really would be trading the spiders pre-market. I suppose some do, but you can see how sketchy it is. But it's going to follow whatever the futures are doing. It can't get that far out of whack to what the future's doing. But as you can see, these are completely developed bars versus the spiders on the hourly. It'll look better, of course, but you can see what I mean. Yeah. Well, and you could always trade the spiders 24. I don't know about 24 hours. Maybe you can, but you could trade them afterward. Anyway, let's continue here. So we got the Qs pushing up here a little bit, and they look a little better as they've cleared this prior resistance area, which is pointing to that they can continue to move up. Looking at the NQs, you can see how close they are to the prior high, which is going to be resistance. But theoretically, right? With a reversal bar like that, I think it would be a little bit of a concern short term if these Qs couldn't take that high out. I mean, okay, it's a big whole number of 8,000, but it backed away from it once. So one of the concepts as far as support and resistance is once a reference point has been tested, we discount it a bit because its use as a reference point has been used up to a certain degree. Now, if it cannot get through that and forms a red bar, maybe it's an M top, but right now, this is pointing to getting above this level. So that's one of the things we'll see. Weekly chart, same analysis. It's already made a nice run. It's taken out the prior high. The momentum obviously has stalled. So far, we've got an opening price in the same area as what we would assume to be the closing price, but we'll see. If it's higher, it's going to be a green candle body with a bottoming tail, which small candle bodies also suggest stalling and momentum. So trends are still up. We'll see if the markets can continue to push those trends. Would you buy the breakout or wait to see if COG forms another signal? On the spiders, Howard? Well, he's saying breakout to new all-time high. I would buy it with some, since you're in the chat room, I would buy it with some type of intraday pattern that's in alignment with this. And I would put a stop below that pivot low. It's an old terminology, Talia, from my prior company. It just moved. It just means that it went from a red bar to a green bar, right? So I could buy this intraday, right? Even any kind of a pullback into here, that's bullish. And then with the expectation that it's going to make a new all-time high, because that's what this is suggesting. Right? Dow, narrow range day, bullish pullback. I mean, you look at this chart, you have to look at it as saying it's going to make new all-time highs. Right? It's in an uptrend. It's pulling back to minor support. You've got a bottoming tail bar. How else can you read it any other way? If you're thinking it's going to fail, well, tell me why. You know, not something that I see. We don't even have internals yet telling us to be nervous. Right? Their sentiment is dead neutral, and breadth is dead neutral. So I really have nothing here other than maybe, you know, the transports to have some concern as what's going on, the way it came down here, but it didn't break below that support level. It's just kind of a wild, whippy animal, you know, so I'm not trading this. So I'm just using it to say, is it in alignment with what's happening in the broader markets? And kind of it's just erratic and whippy. So oil, you know, broke down below that low yesterday. We'll see where that goes. It's in a downtrend there on the hourly. So I'm not so sure what that's going to do. Bonds are down here a bit, but overall it's just within this trading range. So unless you're a day trader in this market, I really don't see any advantage for doing anything here. But we keep an eye on it because we want to know what bonds are doing, what interest rates are doing. And right now, they're kind of just neutral, stalled. Gold, a little profit taking here, but just looks fantastic. Hourly's moving up there. I mean, the weekly, should say, you know, continuing to push up here. As we covered, it broke above all those highs. So that's looking good. It had a nice little consolidation into the rising 20 and reversal. So just because it's stalled here doesn't really mean anything. If it was to come all the way back down here, it's like, why did it do that after this resting period? It shouldn't come back down here. But there's nothing to suggest that's going to happen right now. And lastly, the Russell, right? In the video I sent out last night into the Telegram, one of the things I talked about was, could this possibly be a little breakdown failure, which would help a bias of being bullish on the market continuing to go up, since this consolidation was supposed to resolve itself to the upside, and then it broke down a couple of days ago, but it held. So if this can start to move up, I'm just looking at those futures here, they're really not giving us any good guidance, but I'll be keeping an eye on these to see if they can bring up the rear here today. And if the transports hold and if things are making a new all-time highs, it's, you know, wonderful to be a bull in this market. And, you know, until I think we get our market internals to suggest otherwise, we shouldn't be too concerned about these small corrections along the way. So that's it for me. All yours, Dan. Everybody in YouTube land, have a wonderful weekend.
All right, good morning. Why, Robert, did you stop? Let me switch screens here. And we have a lot of earnings, so I want to start with the gappers today instead of the opens, because all the opens are fine. Weight Watchers, this was a core to us. I mean, look, daily, weekly, monthly, huge retest, double bottom, new low, bullish, new low divergence. We bought this gap up with a big stop. And then 2 days later, we moved the stop here. So our stop is still currently here. All right, let's look at the gappers here. This looks like a penny stock toy, no interest. SWKS earnings, no pattern. This thing's gapping down to 19 bucks. That's a bearish breakdown in the weekly. And look how that got climactic with a 2-bar 180 reversal and all air below. Wow. There's a couple of IPOs here coming out, MBLA, Martin. I can't tell where it's gapping. Expo. If this is gapping up here, the 67 bucks, I only see one print there. After 1, 2, 3, 4, 5, 6, 7, 8 up bars, then that's a gap and crap candidate, provided it's not a buyout. ISRG, 553. I'm sorry, 533, gapping down a little bit into this big bar. So nothing to do with that. 3609, that's absolutely flat right now on earnings, but it's an engulfing bar. It looks higher. RF, it's a mess. Look at all those football players to the left. Same with this, gapping up 18 cents, but you got a wall of resistance right here. I'm pruning. I just go through and stuff I don't want to be bothered with. 47.63. This is a big old bottom with a bottoming tail. It's a definite put spread candidate. Cough 90.20, bullish gap. But you got football players. RECN, it's flat. I can't tell what it's doing. Little sketchers here. 40 bucks. That's a monster big gap. GNTX, I can't tell what it's doing. IBKC, no volume. KSU up 4 bucks. There was another railroad yesterday. Remember that had a big old gap? I forget. Was that NSC? No, there was one railroad yesterday that gapped over its ugly red bar. Man, 87 bucks. That's a bearish gap. Let's see if that sets up 30-minute low. UNP, all right. 15 bucks. Here's another one. It's a wall of resistance. I have zero interest in that. UNP, yep, that's the one. Yep, remember pre-market? It was deep into the bar. And then when the market finally opened, yeah, that's a bullish gap. Man, slob. Might get a bounce trade is all, but it, you know, came down, it cracked the major support pivot. STT, it's still in a downtrend, daily, weekly. It could be a put spread if it can get its motors going. Well, yeah, it's up 2 bucks here. Put spread idea. And this is option expiration day, so let's be on the lookout for some. This one's total garbage. For some. So I'm bullish here today. Look at the cues here. Buy setup, gapping up. So I'm definitely in the bullish camp here with yesterday's nice reversal. I see Apple here pre-market chugging. Yesterday that was on my watch list. Now it's 206. That's a breakout. I mentioned yesterday target, you know, 210 area. AXP getting whacked, 126. So that's a bearish gap under this bar. That's a bear call credit spread. Watch. I'm going to put him here in this window. SYF we already looked at. Cliff Clavin. Bullish gap, but sloppy. Boeing. Big article in the journal today. Boeing to take a $5 billion hit. So I guarantee you 99% of the public would look at that and they would say their mindset would be, let's short Boeing. And look at it, it's up $9. Now, why is that? Oh, Hugh, did I? If I did stop out of WW, then it is what it is. But okay, then that was my mistake for tightening the stop that tight. Stop at a profit, but it is what it is, as we say. Well, it's not that no, trader, that's not correct. And I reviewed this with Debbie many times. It's not that the bad news is out. More accurately, the news that is out was more favorable than the market participants predicted. And that's exactly why, stocks go up and they can lose $3 a share. Stock gaps up. Why is that? Well, because they thought you were going to lose $4 a share. BLK, I'll go through a few more here. I don't know if Z was earnings, but put spread idea maybe. Microsoft is definitely helping the Qs today. Look at that. Definitely. CRWD had earnings. Wow, look at that. Now that looks like whoever played the short options games is getting whacked, because I guarantee you the expected move was not that big. A little chewy here. Nice reversal on support. It's a mess, but let's watch that for a put spread. Old McGraw. It does have options, the 30s for next month, and they're juicy. The 30-25 right now is 65 cents, but let's watch the pullback. We do what we do every day. With a lot of these big gappers, it makes sense that things come in a little bit. Now let's go through the opens here together. So I'm going to put Chewy up here. Ubers are only open in the weekly. Abbott, we're long stock. Bravo Romeo, long stock. Remember I said yesterday, Bravo Romeo, I would take this one over Disney. Very nice move here. Yeah, my stop there, Alex, I just kind of eyeballed it under a little 5-minute congestion. That's where I got that number from.